if Bitcoin becomes the backbone of a new financial system, which it really is, like, it's the king of the remittances. It is the immutable blockchain, and people have a lot of reasons that they trust it. In 14 years, no one's broken it, and there's no replacement. Then if the US owns 1 million Bitcoin, they'll be the largest holder of Bitcoin.
But what are we doing with it? We're facilitating trade with it, or we're just holding it?
Well, I'll guarantee you if Bitcoin got to 36 million, okay, theoretically, the US cost of debt would go to zero.
Okay.
They would have because they have zero net debt.
What's going to happen on Friday?
I think, okay, so the base case, I think it's a really bad jobs report, maybe 50,000. I think the market panics, but Powell's speaking at 12:30, and you're going to see the May odds 100%.
After that, the conversation turns to Tom Lee's most recent assessment on the market, including his positive outlook on Bitcoin and stocks. His prediction that the S&P 500 could rise to new all-time highs in spite of economic uncertainties is a major area of focus. Strong corporate earnings, declining inflation, and possible rate reduction by the Fed, according to Lee, might all contribute to a significant rise. He also believes that institutional adoption and ETF inflows are driving up the price of Bitcoin, making it an essential hedge against monetary devaluation. Lee's audacious prediction that Bitcoin may hit six figures when macro factors match is one of the most highly debated topics. He cites past trends, such as how Bitcoin has increased after halving during times of loose monetary policy. He also notes that more and more investors are considering Bitcoin to be digital gold, which may cause its market value to converge with more conventional safe haven assets. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
We can't let you out of here without talking about crypto. You've got a chart in your deck that shows Bitcoin going to 5 million.
Yeah, say the craziest thing you can about crypto so we can clip this for TikTok.
How are we getting to 5 million?
Now that's
slowly.
And then all at once.
Yeah.
By the way, if you got to 5 million, because we have a grid to show it, it's that gold would be doubled in price.
Daniel, previous chart.
Yeah. Gold would double in price.
So this is if crypto reaches parity with gold in terms of market cap?
Yes.
Okay, it's not there already?
No, it's only 10% of the value of gold.
Wait, what? How much gold is there in the world?
There is
10?
$21 trillion of gold.
How much crypto? 3?
Bitcoin's 2.
Bitcoin by itself is 2. Okay, so if the amount of money millennials choose to put into digital gold rivals the current amount of gold, you know what the flaw in that logic is? If there's this huge predilection for Bitcoin versus gold on the part of millennials, then the valuation of gold will shrink. So you might get parity, but that's because the amount of money in gold goes down.
Yeah, I thought about, and I got the numbers a little wrong. Let's say gold has to go to like $7,000. However, I heard something interesting, and I didn't realize gold has outperformed the S&P 6 of the last 7 years.
Yeah.
So,
quietly too.
Yeah, so gold isn't a bad asset class, but Bitcoin. So I think even if it's not like millennials need to buy gold for gold to go up, you just need the boomers to hold it.
Why would we have a Bitcoin strategic reserve?
I think it makes a lot of sense.
Why?
Well, we already have one. We've confiscated Bitcoin.
All right, but why do you think it makes sense?
Why should we buy more?
If Bitcoin becomes the backbone of a new financial system, which it really is, like, it's the king of the remittances. It is the immutable blockchain, and people have a lot of reasons that they trust it. In 14 years, no one's broken it, and there's no replacement. Then if the US owns 1 million Bitcoin, they'll be the largest holder of Bitcoin.
But what are we doing with it? We're facilitating trade with it, or we're just holding it?
Well,
if it's a strategic reserve, with a strategic petroleum reserve, they use it. When there's like an oil shortage, or there's a problem, or there's a dislocation, they will tap the reserve.
But yeah.
And then when prices calm down, they'll add it back. Michael's question, how does a Bitcoin strategic reserve function?
Okay.
Would there be a shortage of Bitcoin? And
to what end?
These are good questions, but keep this in mind. So oil's a strategic commodity.
Clearly.
Okay. Now, oil only has 7 buyers, really. It's the refiners. Oil, that's produced everywhere, it's really just bought by refiners.
Who then turn it into something useful.
Yeah, to distillates and gasoline.
Okay.
But there's really only 7 buyers. And so if you look at oil, the oil market that's bought for distillate, and then say, take the total trading volume of oil against that. What do you think the ratio is?
I don't know, tiny, right?
400. For every dollar of oil that's bought at a pump,
I
it's traded
see.
400 times on speculation.
Wow. Okay.
So you need a strategic petroleum reserve because there's so much price speculation around it that you could be whipsawed if you didn't control some way to manage prices.
Okay. So Bitcoin is the same.
Yeah, so let's
Tons
say
of
Bitcoin,
speculation around
let's say
it.
that it becomes 10% of people's net worth and banks start to use it to secure information. Because remember, the blockchain, you can just store 1 pixel of a 10 million page document, but the hash will detect if you changed 1 pixel. So that's why you're going to use the Bitcoin to secure information, right? Well, that's really valuable, but then wouldn't the US want to be able to control this blockchain or exert some way to censor it somehow?
Okay.
And, once banks start trading Bitcoin, like Citadel, it will probably be the most profitable product for Goldman and JP
Because of how volatile it is, bid-ask spreads are wider.
Correct. And if oil's traded 400 times, Bitcoin might be 1,000 times. It's going to be a hugely traded commodity.
Okay, so this is a productive thing, even though, to my earlier point, we have a budget deficit, we have tons of debt. This is a project that we should also undertake now because it might come in handy at some point in the future.
Yeah, well, the US owns 200,000 Bitcoin, as long as it's not, those keys are safe.
Okay.
And so let's say they buy 800,000 more through the Exchange Stability Fund, so another 80 billion.
If they do that, I think the price goes to $1 million too. I just don't know if they're going to do that.
Yeah, but then if Bitcoin gets to 36 million, there's no national debt.
As economic data decreases, Tom Lee shifts his focus to monetary policy, namely the Federal Reserve's next actions. He forecasts a weak jobs report that might lead to market panic, possibly as low as 50,000 new positions. Lee anticipates Fed Chair Jerome Powell to intervene and reassure investors nevertheless, in order to assist stabilize the situation. Lee believes that a more dovish stance from the Fed will raise the likelihood of rate reduction by May. Falling the 10-year Treasury rates and rising rate cut expectations indicate that present monetary policy is overly tight and is beginning to exert pressure on the economy, which is already causing the bond market to signal that the Fed is behind schedule. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
Okay. In that fantasy, who do you sell the Bitcoin to pay off the debt, though? I've heard that before.
Michael Saylor, hello.
So Michael Saylor buys the Bitcoin from us, and we use the proceeds to extinguish our debt.
Well, it's not, you don't need to sell it because it's almost the same thing as like if NVIDIA is 3 trillion, it's not like someone would say, oh, well, you're going to liquidate all 3 trillion, so it's not worth 3 trillion. It's as long as the value is stored at that level.
Okay.
And you can still trade
Then
it.
we could say it's an asset that offsets the debt that we have. We don't have to use it to pay down the debt.
Yeah.
We could just say we're backing that debt with this asset.
I'll guarantee you if Bitcoin got to 36 million, okay, theoretically, the U.S. cost of debt would go to 0.
Okay.
They would have because they have 0 net debt.
What's going to happen on Friday?
I think, so the base case, I think it's a really bad jobs report, maybe 50,000. I think the market panics, but Powell's speaking at 12:30, and you're going to see the May odds 100%.
Because Powell's gonna make it all better. Like he's gonna calm people down. Like we're aware of the situation.
Well, because this is like now with Atlanta, GDP now negative, and then jobs. This is not like the Fed can sit there hawkishly because the Fed's already comfortable that they've got a big margin of cushion where rates are. They're already running tight,
right?
And now they're assessing how much damage it's doing to the economy before tariffs. And this is the thing, like we know a lot of the supports have been rolling off at the start of this year. That's why consumption's down. And then tomorrow's a jobs report, but already it's foreboding, like the Challenger job cuts, ADP. If we get a 50,000 jobs report tomorrow, there's a huge question on this dual mandate because full employment, I mean, we're risking a real collapse in the employment market.
Does the market rally or get killed on that sort of print? I think it gets killed.
What, a bad jobs report?
Like that bad?
Yeah, I think there's a panic, but then there's a rally.
Yeah.
Because I think the Fed put is back, and then I think the Trump put has to come back.
The Fed wants to cut. So this does enable the Fed to cut. It's just not the circumstances under which it wanted to cut.
Yeah.
I don't think the Fed wanted to have to cut. I think the Fed liked the position it was in, where it was like, we will if we need to.
Yeah.
Then maybe we'll do one. Maybe we'll skip a month. Like that's where they were. They can't be there still. Now they have to. Now they actually might have to react.
Yeah, I mean, in a way, the bond market. I mean, I'm sure people interpret. I think is arguing the Fed is late to cut.
Okay, why? Because of what the 10-year has done, or
Yeah, where the 10-year is, with the implied, like even the odds of a May cut. I didn't see it today, but I bet you it's well over 50% now.
a cut in May?
Yeah.
Oh, I would bet it is.
Yeah. So that's a Fed that's actually kind of being now judged to be behind the curve. And so if they're cutting, it's going to be a welcome pressure valve release because the market's pressuring the Fed to do something.
Right. Market people love to look at AAII and act contrarian to that. Last week, one of the things we were talking about on the show was how fast the bears shot up to an almost record level, like higher than they were during the pandemic in that survey. I think the percentage of bearish respondents hit 55, which is an unheard of number. And then when you consider the fact that at that time, the S&P was only 3% off a record high, it was really weird to see how fast sentiment turned negative. In hindsight, a week later, that bearishness was not a great contrarian signal. The bears had it right. Mm-hmm. What do you think about that? I know you follow AAII.
Yeah.
You look at that stuff.
I follow it, and I think from the right time frame for us is like 6 months.
Okay.
Because then it captures, because the survey is done over a period of time, and so it doesn't always capture what the market did that week anyways.
Okay.
But
it's cumulative, you're saying?
Yeah. It's kind of the same thing like when these economic surveys are done. Sometimes they're done finished by Wednesday or Friday, and then so you actually get some weird differences because of what's happened in those 3-4 days.
According to Tom Lee's viewpoint, the Federal Reserve's monetary policy experienced a significant shift. He feels that the Fed is in a tough spot since it wanted to keep its options open when it came to rate cuts, but it may be forced to act due to deteriorating economic data, especially a negative jobs report. Market panic and worries about a sharp decline in employment could result if job growth falls below 50,000. However, Lee contends that since it would resurrect the Fed, put the belief that the Fed will intervene with supporting policies, such as rate cuts, to stabilize markets, such a market sell-off would probably be brief. Additionally, Lee notes that the bond market has already indicated that the Fed is lagging behind. Investors are now putting pressure on the Fed to act because of the 10-year Treasury yields drop and growing market expectations for a rate decrease in May, which indicate that monetary policy is too tight. The Fed might be forced to take action sooner than expected in certain situations, even though it may not have intended to lower rates. Tom Lee also discusses the mood of the market as a whole. He points out that even when the S&P 500 was close to record highs, bearish sentiment lately reached unprecedented heights. Although some investors see severe pessimism as a contrarian indication of a market recovery, Lee admits that, considering the economic dangers involved, the pessimism may have been warranted this time. Overall, his observations imply that although there will probably be short-term volatility, the Fed's response may eventually help markets. Similar to other cycles where monetary easing helped maintain investor confidence, rate cuts could provide a relief rally if they come to pass. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.